Hey everybody, Economic Ninja here. I hope you are doing great. We're going to talk about the Federal Reserve. We're going to talk about interest rates. We're going to talk about unemployment. Things are happening so fast, it is absolutely insane. But the one thing that is constant and consistent is that the pros, the economists out there telling you that inflation, we've topped. Oh, nope, now we've topped. Oh, now we've topped. They are all wrong. As a matter of fact, we just saw core CPI come in at red hot numbers. Core CPI at 6.6% is something like 40-year high, and we keep seeing that 40-year high, and I've explained this before. We're backing into the chart. If you go back and look at an inflation chart of what happened in the late 70s, early 80s, we're going backwards, but we're keep going higher and higher and higher. This is going to be much worse than what we experienced in the early 80s, late 70s, and people just don't understand. Most people have no clue. And the fact are, people are already being laid off, and it is picking up pace. We've seen travel and leisure take a hit. Now we're seeing real estate take a hit, and it's going to keep moving and moving on. As a matter of fact, I just saw Beyond Meat is laying off 19% of its workforce. I gotta be honest with you, that wasn't a surprise to me because most Americans want to eat meat. I just don't understand some of these business models. But the facts are, people are going to need to find interesting new ways to make money. So like this gentleman, he's gonna work for Sushi. I like that. I know it's backwards. I get it. I do it on purpose. My point being is this. I told him I needed his sign for my notes. So just, you know, I'll be giving it back to him when we're done. But he's sitting over here and he said he'd be nice enough to give it to me. So the reason why I got the notes, and I'm going to be talking about this company in a second because the sponsor of today's video is Gold Royalty Corp. And ticker, I'll put it up top on the NYSE. GROY. I'm going to explain what they do and why it's different because I want to bring you guys knowledge, but I want to dive into the inflation story. See, the thing is, inflation keeps going up and up. The Federal Reserve keeps raising rates, but they're not raising them aggressively enough because they know they're going to break the back of the system, right? And it is already breaking. As interest rates go up, people cannot afford new homes to buy or to move up in life when it comes to selling their home and moving into a new one. They now can't refi and tap into that income that some people use as income, into that real estate to be able to live off of or use it for another investment. Why? Because it's so much more expensive to borrow that money now, right? There's also some people are choosing not to pay off that debt because they're afraid that they're never going to be able to get a lower interest rate again, right? Again, people think that whatever's going on today is going to be like that forever. Normalcy bias, right? But cycles happen and cycles move and change. Now, here's the thing. The Federal Reserve, we now know it's concrete. They are going to raise rates stronger again. This next cycle, they're going to bump it up. Now, the question is, with core CPI coming in so hot, are they going to continue with 75 basis points? Or are they going to go for a full 100? And if you think about it, as they raise these rates, they're becoming so strong. The dollar is getting so strong versus all these other currencies, right? And you know what I think about dollar strength. It's all relative to the other crap currencies around the world, okay? They're all fiat. They all completely go down over time because they get printed out of control. Well, right now, they're breaking the backs of these other currencies. And as those currencies break, their stuff starts to collapse. Their economies go down the tubes. It reverberates back to us, but it takes time, and people don't get that. So now, I'm talking about gold all of the time, but gold normally does well in low rate environments, right? And so right now you're going, well, yeah, that's not the time for this, but actually gold price is still extremely strong coming out relative to how strong the dollar is. You know, used to be in 2015, in 2000 and, I'm blanking on the dates, but every time you saw that the USD index started to tick up and get strength, gold would really come down off of its highs. And you're not seeing that right now. Why? Because the physical story. Premiums are exploding everywhere. It's getting more expensive to actually obtain the gold, and you have big central bank buyers right now diving into the gold market. So there's so many buyers. Why? Because this time is different. They are truly afraid of a worldwide economic collapse, so they are positioning themselves into that market right now. So gold's strong. But everybody's waiting for that Fed pivot, right? They're waiting till they break enough of the economy to where they go, okay, it's time to lower rates to stimulate the economy. That's when gold explodes. Why? Because as they lower rates, it frees up cash, and they also use stimulus to try and stimulate the economy and show that they're actually doing something. And investors race into gold because they know that currencies are going to be devalued even more. All right? So let's talk about the sponsor of today's video, Gold Royalty Corp. Now, it is traded on the NYSE. That's something I like because it's a big exchange, which means available to any investor out there with all these apps. Apps are a big deal right now. Robinhood, and I'm going to be honest with you, I don't like dealing with those apps. There are certain ones that I like, but they have to be solid companies, that the way they handle the transaction, the stock trade. But my point being is that this NYSE ticker, GROY, is available to anyone with any kind of brokerage account, right? So I really like that. But they are a gold royalty company, and a lot of people don't understand what that is. A gold royalty company, or any kind of royalty company, goes out and they don't actually mine. They're not out there drilling holes, digging up earth, and refining the metal themselves. They go and they finance companies. So they go out and they say, here, we've got some money. You need money. So what we're gonna do is we're gonna give you the money, but for a certain amount of gold that comes out of the ground, or silver, or whatever they're doing, right? They go, we're going to get that at either free, like a certain amount of ounces to pay us back plus interest, or we're going to get a certain amount of ounces out of the ground at a certain pre-designated price. Or I've even seen it where they say, look, for the life of this mine, we're gonna get a certain percentage of that metal that comes out of the ground as a streaming royalty. And the cool thing is they have, it's a totally different plan, because they could become super diversified. So let's dive into this, and I'm gonna explain some things that I like about it, all right? It was started by Amir Anani. Amir Anani is huge in the uranium world. He started Uranium Energy and Uranium Royalty, big companies, right? So he's used to large companies. He actually, well, here, let's go back here real quick. The royalty streams, and what I think people need to realize, it provides a way for exposure to gold, all right? So this company, if people are looking and they go, I want an exposure to gold, well, you can buy physical, which I always suggest. But then people go, okay, I want to get into mining stocks. So like, okay, mining stocks are tough. And the reason why is because out of, 100 projects, one of them will be viable. So you have to do tons of due diligence, right? So like I've told you before, I look at where the large investors are. Who are the large investors? Where did they put their money? In this company, Eric Sprott is a large investor. You know that I respect Eric's work. So he's a investor in this company. I also look at the management team, things like that, and we're gonna get into that and how they did that right. But if you're looking for exposure to gold, this is nice because a royalty company brings in revenues, and they have low margins, low costs, or sorry, high margins and low costs. And they can go and put money in all kinds of different projects and have that that like diversification that you really need to have when you're in a sector that you don't know a lot about and you're learning. You don't want to go put all your eggs in one basket and have that be lost, right? This company has exposure to over 700,000 meters of drilling across their portfolio, and that's as of 2022. Okay, so when we're talking about exploration companies or producing companies, when they're out there looking for gold, silver, anything, they're drilling into the ground, they're getting those core samples, they're building their maps. And if you have your money in one company, you only have one plot of land, one area of the world that you're really hoping that for that discovery. This gold royalty company has a diversification of that many drill holes, that many meters, right? And it's all over. So the whole point of diversification is key, and this fits that budget. Now, a royalty company is different from a mining company since they're not, actually drilling, like I said, they're actually not going out and digging up the earth. They have the high margins, like I was saying, the lower costs, but they can also easily scale. And that's very important too, because as one of their projects takes off and is bringing in good income, that income now can be used to go to another project, another company that needs funds to take off, and they've got a great find, but they need to raise money. And a royalty company can take the profits they're making from another company and go, here we go, let's build bigger. So they can scale at a pretty fast rate. Now, management team, I tell you that's very, very important, okay? So I'm gonna give an example. Newmont and Gold Corp, two massive, massive companies, right? Huge tier one mining companies. They merged a few years ago. It was a $32 billion deal. The CEO of Gold Corp at that time was David Garofalo. He was part of that merger. He is now the CEO of Gold Royalty Corp, okay? So tons of experience, worked for a massive company, but it's not the only thing. Also, the founder of Gold Corp, Ian Tefler, He also moved over to become part of the management team for Gold Royalty Corp. Okay, so you have gentlemen in this management team that were part of massive companies. So not only do you have that experience and know-how, but they have their Rolodex of who's the best in the industry and who they want to work with. So that I'm always looking for too. You don't want to invest in a company where there is somebody that's new, this is their first project. It's, you know, everyone's always got to have their first, right? We've all been there. But the facts are, when you're investing your money, you want to have people that have a proven track record of winning. They have a good reputation. That's very important, all right? I want to invest where the wealthy people invest, because they became wealthy because they already, you know, took the hits. They already had their lessons. So I want to listen to them. The Eric Sprocks, the Rick Rules, the, you know, there's so many, I'm just blanking out right now. But I wanted to give you guys that idea. And I think it's very important to understand how to learn the different cycles, because as we talk about the Federal Reserve and what's going on there, and of course the guy's gonna fire up the weed eater right next to me, I wanna make sure everybody understands this. As we move into this bull cycle of gold, because everyone's waiting for the Federal Reserve to pivot, when they do pivot and that interest rate comes down, gold's gonna take off. And you need to have the knowledge behind you to know, because the mining sector is gonna be so leveraged to the price of gold, it's insane. But you need to know the difference between an exploration company, a junior mining company, a major mining company, and in this case, a royalty streaming company. Totally different ways of thinking, ways of investing, and different ways to make wealth as this bull market takes off. I believe we're already in the middle of it, and right now, why? Because there's blood in the streets, and the prices of these stocks are insanely low because the price of gold got hammered due to a strong dollar. So that's what's incredible. And actually, there's, if you guys look at it, I'll put a link below. There's even analysts that are calling for companies like this to be at much higher prices in the future, just based on the price of gold and where they expect gold to go. So anyway, wanted to bring you that information. I thank you so much for watching. And with that being said, since the guy with the weed eater is about to fire up, the Economic Ninja is out.